Hi there and welcome. Again, my name is CCP Zipora, and I want to believe you are joining us for this session, our module number 3, and you have enjoyed our free module number 1 and also our module number 2, which was credit risk management. And now today I want us to talk about collection management. And this is a very important area that most of the time it is not given the attention that it requires. Where you have sold, you anticipate or you expect the customers to pay you without having to follow up. But I'm here to give you a different narrative that after you have invoiced and billed your customers, you must make a follow-up to collect from them. So just sit back and relax, and I hope the lessons you're going to get from this session will be valuable, and you're going to apply them to your day-to-day activities to make sure that your credit business is a success, and the business that you're also selling, or whatever you are selling to customers using credit to enhance sales, is going to bring in the results. So thank you and welcome. Sit back and relax as we learn in this session what we should do or what we need to know about collection management. So as I've mentioned, that this is our module number 3, and module number 3 is basically about collection management, and I want to ask ourselves a number of things what we need to learn. In the objective of this session, we are going to look at what we call the introduction aspect. We look at collection objectives, when you're collecting, what your objective is all about. We're also going to talk about the collection process that you need to have or implement in your business. We'll also talk about collection tools that we use when we are doing collection. And then a big part that I want us to learn is what causes default in relation to the client and also in relation to yourself. What causes default? And then finally, we will talk about revenue collection challenges, because collection has challenges. We may not be able to recover everything, but there are challenges that we are going to come by, and it is good to know these challenges so that we can be able to come up with a way of overcoming the challenges. So welcome once again. And one thing is for sure, and it is known, what has made many business to fail or even to go under is lack of cash. So when you're not collecting from your consumers or from your customers, then you're likely to end up having what we call a cash crunch. You're going to have a challenge with your finances as far as running the business is concerned. So we say without cash, the organization cannot, of course, operate. And the success of your business will depend on cash and not just sales. So we are not supposed to celebrate because we have just sold, but we should celebrate that we have sold and we have collected. And what gives us confidence in business is when we have cash. So cash gives us the confidence that we need in as far as money or the business is concerned. So when you don't have cash, would you have confidence? Can you face your employees? Can you face your suppliers head on? No. So cash is, we normally say that cash, of course, will depend on a number of things. And this one, cash depends on your customers. And if it depends on your customer, you need to be following up with your customers to make sure they pay you on time. Why do we say this? It's because your invoice or your bill is just one of thousands that are in a customer's file. What do I mean? Many people are competing with your customers' money. Many issues need cash so that they can be resolved. So your customer will require, you need to be paid by your customer for you to be able to run the business. And you can do that by making sure that you are a priority in your customers' books. Otherwise, others will be paid and you will always be waiting for the payment, which will never come forth. So I challenge us in this session that we should treat collection as one of the key inputs that needs to be done in a business. So to a customer, your account is just one of hundreds of debts to be paid. So who are these that are paid? Maybe at this juncture, I should mention, they that pester, they that ask, they that knock are the ones who get paid of their money by the client in good time. So this lesson should teach us on how to follow up and ask for our money without any fear that the customer is going to maybe to be upset. So we also say therefore that collection is a process. It is a process which requires a step-by-step strategy to achieve your company's objective. So if your company objective is of course to drive, to grow, to expand, to increase and do all that manner of things, then we cannot do without collecting. So we have to follow up, we have to ask for our money. So in terms of what drives collection, I think first and foremost, the income that we anticipate, it will only come through collection. So we need to collect, and how we collect, we need to make sure that the method or the process that we are using to collect is cost effective. So what we say therefore is that as an organization, as a business, as a department, it is essential that you ensure your revenue management and debt collection activities, they result in timely payment of the outstanding debts from your customers. And we say this, as we are collecting, we should also make sure that we are not damaging the good relations, or what we call the relationships with our customers. So we should not collect and kill the business. Why? Where will we collect tomorrow? So we need to make sure that as we collect, we are ensuring that we are also maintaining relationships. And it is a timely payment that will offer our business the solution that it requires, and that is cash to run the day-to-day activity. So what about our collection objectives in that organization? I think our objectives when we are doing when we are carrying out collection is to increase debt recovery and maximize profit. So what do I mean? When customers are not paying us, I think we learned in our very first module that when customers are not paying us, it means that our profit is diminishing, because the longer they take to pay us, then the more expensive it will become for the company to recover the money. Then the other part, the key objective also in collection, it is to reduce bad debts. Why? Bad debts are an expense. We will be required to provide for bad debts. And when we provide for bad debts, this is an expense which affects the profitability of our business. So the other thing, another objective, number 3, we are to improve cash flow and drive growth. Without cash, without payments, without getting money from the customers, we cannot grow the business. We only grow, it is cash that we receive from the sales we have made that will enable us to grow and drive growth in the business. The other one is to reduce the cost of collection, reducing the cost of collection. So when you follow up in good time or early enough, you're not going to use a lot of money or expenses to recover or to collect your money. The other one is to enhance customer experience. When we collect, actually, it is contrary to what many believe, that you should not bother pester your customers for payment because you ruin their relationship. I want to change that narrative and say that is a wrong notion. When you're in business and you have given customers a credit facility, you need to ensure that you follow them up so that they can pay. Failure to follow them up, you make them incur bad debts also, which will also become expensive on their side. So create relationships with your customers, good and lasting relationship, by doing collection. Then the other objectives, of course, for collecting is to get a faster return on investment. When I talk about return on investment, remember our capital is there. So when we are not getting paid on time, it means that our investment is wearing out. That is, it is diminishing as well. So our objective when we are doing our collection is to make sure that we get faster return on investment. That is very important. So what is this that you have heard, or what are the truism, what are the collection truism that are out there in the market? I think I want to concur and say that collection begins way back at the point of sale. So if you are to be assured of a collection, if you are to get paid for the sale, ensure that our onboarding process, at the point we onboard the customer, we have laid down the procedures, the processes, and they know when they're supposed to pay us, and the terms that we are according to them, so that they can go by those terms. So collectability of a sale, we say that it starts with the selection of the customer. So if you select a bad client who doesn't pay, or when you onboard a customer on a wrong footing, be sure you will suffer bad debt, or you're going to suffer delayed collection. So collectability, therefore, we are saying collectability of a sale starts with the selection of your customer. Make sure that your selection process is right from the word go. So the other thing we say that it depends on how credit terms are explained to the customer. Please do not shy off talking about collection. Do not shy off talking about payment, or when the customer is expected to make the payment. If you shy off from telling them when you expect or when you anticipate the payment, you will have a challenge. The other thing is when and how soon or how quickly do you process or do you deliver invoices and statements to your customers. Nowadays, there is that common statement that we hear: we are yet to receive your invoices, or we have not received the statement. They could have their invoices, but they lack the statement. So it is up to you to ensure that these customers are delivering, or you have given them the invoices and statements on time, so that they will not have an excuse of not paying you when they're supposed to pay you. I hope that is clear. Then the other truism that we talk about is that the sooner you ask, the sooner you are paid. So what does that tell us as people or as individuals who are working in collections department? So we are saying the belief that is out there, which says that customers are upset we ask them for payment, it is a wrong narrative. And we have said, please remind your customers to pay you, contact them on time, send them the documentation they need. And then we say that on the contrary, a typical policy for payable department is to hold on checks or payments maybe until when they are asked for payment. So if you're not asking for your payment, the accountant on the other side, who is in charge of payable, will believe that you do not have the need for money, and therefore they can delay your payment, take time, dilly-dally in paying you. So make sure that you ask sooner so that you can get paid soonest. I hope that makes sense. And then the other notion that is there, another truism that is common in what we call in collection, we say that a sale is not a sale and it is until it is paid for. So we say that sales are just notional book entries. What does that mean? If the customer has not paid you, stop celebrating the sale. There is no sale if the money has not come on board. We have just incurred a cost. When we sell on credit and we have not been paid, we have just added a costs on our side. So that costs, that expense that we have incurred by selling on credit will only be recouped back when we ask for payment. So we say that therefore a sale is not a sale until it is paid for. We've also said the sooner you ask, the sooner you get paid. And we have also said the other one that we've talked about, collections begins way back at the point of sale. So make sure that these ones they are very much present where you are. You make sure your customers are aware of when they're supposed to pay you, from the point of engagement or from the point of onboarding. Then we are saying the sooner you ask, the sooner you are paid, and a sale is not complete until it is paid for. The other part now that I want us to look at is what we call revenue collection process, because we are saying it is a process. Collection is a process. So collection is not a destination, but it's a whole process altogether. So meaning there are stages, there are steps, there are things that we need to do. And I think the very first one, when you're doing collection, it is what we normally talk about, capturing, or what we normally say, capturing all components to be billed. Accurate billing, making sure that the invoice you have issued to the customer is right, the invoice is accurate, and all components of the billing has been taken care of. And then the other one, after we have done the billing and we have delivered the invoices, then we have to do the collection of the revenue. You have to follow up. And of course, we have to maintain good records. And this is what we are talking about, accounting or posting payments and adjustments. So once customers have paid, then we have a responsibility to ensure that the customers also, now we keep the records right, their statements are accurate, so that when we are following up from them, then we have the accurate data from the customer. So that is something that we need to know. So when we are talking about the collection process, we've talked about what we say. One is capturing what is to be billed, and you prepare the invoice for the customer, you dispatch the bill or the invoice, and then now you follow up for collection, and finally posting and reconciliation. That those are the stages that are very crucial, and this one works well when you're talking about trade credit. Those customers that you are selling goods and you're also selling services to, we need to capture that very accurately. So a content of a bill, we are to ensure that our bills are accurately captured. So when the bills are accurately captured, we are saying that we need to name the company or the person being billed. We must ensure that the invoice or the bill has the account number of the customer. You must describe the services that have been offered or provided by the customer. What are the costs and how much are they supposed to pay? What is the amount due and the due dates? That is, the invoice should show that particular information. And then we're also saying it should have contact details of the billing company, payment methods that are acceptable, and finally, if there are penalties and interest to be charged in the event of delayed payment, then we must be able to do that. So billing or invoicing needs to be done in an accurate manner, and all information needed must be captured. And this is an area that brings delay in payment, whereby we fail to accurately prepare the invoices. So when the invoices land to the customer, they have mistakes, they have problems. And most of the time, the customers will not tell you that your bill or your invoice has a challenge. They will wait until when you want to get paid, and that is the time they start telling you, you know why we could not pay you? Because your invoice has this mistake. So the part or the people who are charged with billing, or the people who are charged with invoicing your customers, we must ensure that they are doing it the right way and they are accurate in all ways to ensure that we capture the bills in the right manner. So now the other parts that on getting to know the bills, ensuring that the bill is right, then we have to talk about what we call the correction technique. So once the invoice has been sent to the customer, statements maybe have also been discharged, then the other question that we need to ask ourselves is, what techniques can we use? Techniques can we use now to follow up or to collect our debts? Very important. What techniques are we going to use in terms of collecting our debts? I think one, when we are doing our collection, there are a number of things that we need to do. We need to focus collection effort with the highest return. And this is where we are talking about use of the 80-20 Pareto rule. You need to know who are these, who owe us much or a lot, so that you can be in a position to follow up, because we say the higher the value, the higher the risk. So you can regroup all your accounts, or you can regroup your clientele to make sure that you are applying the 80-20 rule or the Pareto rule, whereby we are saying you realize that 80% of amount due are owed by 20% of your customers. So if you sort out your account receivables from the highest to the lowest, you will be able to see, because the more effort you put on this big client, the higher the returns that you're going to get. Number two, collection technique number two, concentrate on non-defaulting accounts or new accounts. What does that mean, or what does that imply? Is that when you have onboarded new customers and they're on board, please let them not learn the bad manners that are normally with some of the old customers that exist. If they're to pay after 30 days, make sure where the 30th day falls, we have communicated, we have demanded for collection, and we have asked these people or these clients to make payment. Do not allow them to learn the bad habits of the non-paying customers that are already maybe in your portfolio. And then number three, encourage workouts. If you realize the customers are not paying you on time, they have maybe they have the willingness but they do not have the ability to pay, I challenge you today is that make sure that you enter into workout. Make sure you involve them, engage them. Don't wait until the debt is bad. Maybe you are looking for a debt collector or you want to sue them. Those are very expensive ways of recovery. So these collection techniques, if applied, I can assure that 90% of what we have sold, we are able to recover. So encourage workouts. That is our technique number 3. Concentrate on non-defaulting accounts and focus collection efforts with the highest return. Those are things that we need to do. Then another thing that maybe from what you can see, the image I have there, we are saying collecting your company money is everybody's business. Collecting your company's money is everybody's business. Collection should not be left in the hands of a few or a certain individual in the organization. We are saying it requires teamwork. It requires as many people to pull together so that they are able now to get the money. So whether you are the CEO of the company, whether you are the head of finance, whether you are the head of sales, we are saying that collecting your company's money is everybody's business. So we all need to participate. We need to engage in teamwork for us to be able now to get our money. So it should not, this service should not only be left in the hands of one person in the organization. Other collection strategies that we can apply, we talk about reminder letters. This one, you are reminding the customers. We are telling them kindly pay up, your bill is due. You are telling them kindly this amounts are outstanding. They were due on these dates. They are long overdue. Kindly process the payment. So when we talk about reminder, we could do a set of them. Maybe you can have 3 or even 2, where we talk about the first one, usually very polite. The second one should maybe family worded, and it has a clear message on the next step that your company intends to take as far as that account is concerned. So that is a strategy that you can also apply. Then the other one is penalties for late payment. Some markets allow penalties, or some nature of debts require they may allow you to charge a penalty for late payment. So you can, if it's allowed legally, or it was outlined in the contract that you entered into with the customer, it is good to ensure. If they delay in paying maybe by 7 days, by 1 month, you put a certain percentage, because when we say that credit costs us money. So when the customer is delaying to pay you, there is what we call cost of bad debts. There is what we call maybe the opportunity cost that we incur. There is also what we are calling, there is the cost of finance, because that money, we could have borrowed that money. So we are saying we need to make sure that we are also recovering in case the customer has delayed in paying us. What else? This is another one, maybe listing with the Credit Reference Bureau, whereby you're saying these defaulters, they have failed to pay your company, they have not paid on you on time. So you can share the information with the CRB. So wherever they are borrowing or wherever they are, they find themselves listed with the CRB. So, and sometimes when they go and they want a loan, or they want a loan from the bank, if they find that they are listed with the CRB, they are likely to come back and honor their payment. Other strategies, service termination. You cannot continue serving a customer who is not paying you on time. So what we are saying is that if your company has given services and you continue to give service and the customer is not paying you, please take the next step. You can terminate services, but we also say this should be in line with your company policy. Do not just penalize or maybe stop services. Probably maybe the nature of a customer you are serving. If you are serving a hospital, for example, and you are selling oxygen to them, so you cannot just terminate the contract like that because they are patients. So it also depends with the nature of the industry. It also depends with the nature of the product, and it also depends with the relationship we have with the client. So if the relationship is very maybe they rely on you, it is always good to find an opportunity to go and sit and discuss about the old debt. So as far as service termination is concerned, we say this, go for it according to the company policy. Other strategy is engagement of debt collectors. Please don't just leave it at that. Look for a debt collector, a reliable debt collector in this case, who will charge you on a commission for amounts that they recover. Do not get a debt collector who tells you, pay us a certain amount before we even collect. So most debt collection firms, those that are professional and genuine, they will charge you a commission for amount they have recovered on your behalf. Please don't keep the bad books with you. Look for an alternate, look for a solution from other institution who have a debt collection. And then the other strategy that we use, it is legal. So some customers, they have the ability, but they have no willingness to pay. And maybe the debt is huge, and by you taking an action, a court action, you are likely to maybe to get a payment. So we usually say you may consider a legal suit, and we say that this is the last resort. Please don't threaten your customers with legal suits and all that, because it's costly. It's a costly affair. So if it is a costly affair, don't lose. We normally say do not throw your good money after bad money. So litigation is lengthy and expensive, and we usually say a positive outcome may not mean a payment. So even after a case has been decided in a law court, it doesn't mean that you're going to get your money. No, you might still carry on and not get your payment. So make sure as you're making the decision to sue, the legal process that you are making a decision to pursue, make sure that you have looked at all disadvantages and the advantages of engaging a lawyer for collection or for recovery. Then I think for that, we so far so good. And I want us to talk about collection tools. What tools? Maybe now you have the strategy, we have the workouts, we have the strategy of stopping supplies, we have the strategy of debt recovery, sending reminder letters and all that. So what tools do we use? I think collection tools, they involve statements of accounts, making sure your clients, they have received accurate statements on good time, and their statements must be well reconciled. The reminder letters we've talked about, it's also a collection tool. We talk about also what we call telephone collection. This is contacting your customers through the telephone. And we normally say that a phone works best. It helps us achieve more collections because it sends a message of urgency to customers. And we also say when we are collecting through the telephone, it is also good to mind about how the customers that we can contact through the telephone, others maybe that require maybe an email, a visit, or an SMS. So those are collection tools that we can use when we are collecting. So the other question that I want us to ask ourselves, are bad debt borrowers the reason for default? Are bad debts the reason for bad debt? I mean, what we are saying is, what causes bad debt? Is it only the customer by failing to pay you, or have you also, contributed, or is your company in maybe by taking some action or not taking some actions have they led now to non-payment? So I want us to ask ourselves, what majorly causes default? What causes non-payment? That is what I want us to look at. What causes non-payment? Very important. What are bad borrowers the reason for default? Is it why we are having default, or there is another reason that makes us to have default? I think I will first not even start with the customer, but I will start with ourselves. How lenders, we cause default. We make customers not to pay us on time. Maybe you'll be asking, how is that? How am I causing these customers to pay? After all, I supplied, I gave them services, I extended the loan to them. How am I now causing the default? We actually say, yes, lenders themselves, the lenders themselves also, they cause, they make things not happen the right way. And one of it is having inappropriate loan terms or credit terms and size. So whereby we are saying long repayment periods. You find that you have given a client a credit facility or even a loan. You are telling them they can pay you maybe after 120 days, after 90 days for goods and services. Maybe for a loan, you also give a long period of time. But we are saying also this may cause default to a customer. Then poor lending methodology or loan appraisal, lack of appraisal, lack of assessment for credit. Not all customers deserve a credit facility. So we need to weigh, we need to know who is this that is worth my money and who is not worth my money. So our poor lending or poor appraisal or lack of assessment for credit on the side of the customer. The other one is lack of credit compliance or to policies. We have policies or we don't even have policies in place. We are not following up our customers as it is required. There is non-compliance. People are selling or people are extending loans to customers without a care in the world. So the other one is lack of monitoring. And when you talk about monitoring, this is where we are saying you are monitoring these customer accounts to make sure when they're supposed to pay you, they pay you. When you notice some red flags or some indications that the customer is likely to default, you take the right action. So lack of monitoring, this one has contributed to many bad debts. So ensure that there is a monitoring aspect. You have a system that is assisting you in debt collection so that you do not have a delayed payment by the customers. The other one is inadequate information systems. That is, we lack systems in the organization to help us in following up or even monitoring or on reporting or getting to know whose account is overdue and which one is still within the days that we have granted the customer. The other one is loan committee or the credit committee that we have in place as an organization, the composition of it and the involvement. Probably you're not involving a committee or we don't even have a credit committee in place. This also leads to bad debts. So it will make, maybe people make decision on their own and customers may default in making the payment. The other one is business culture and approach. The business culture and approach. This is what we are saying, lack of proper and timely loan processing. So if you are giving, for example, loans to customers and you fail to process those loans on time, actually customers tend to misbehave when it comes to repaying the loans. They also delay because probably you delayed in disbursing the loan, and by delaying you also caused them maybe to miss out on the business. So they will want to to make it and to equalize with you because you didn't extend the credit to them on time, and therefore they want to punish you by not paying you on time. Inappropriate products. Some products probably are not right. They have not been well structured or well made. For example, maybe short-term loans, probably you give a short-term for a business or maybe for a long-term project. That product will definitely fail because if you're anticipating that the sources of repayment will come from the project, then it is likely to fail. The other one that it's good to mention is what we are talking about, forced loans to meet targets. This is where you are even giving credit to customers who don't deserve credit. You are bringing everyone because you have targets, and this is common with the salespeople maybe who are working or selling the loans. They want to tell you, just come, you take the loan, you will get to know what to do with the money once you receive the money. So that is also something that leads to default on our customers. So the other thing, we talk about procedures that leads to default. I think establishment of repayments which are too high, where the customer even that do not even match the customer's cash flow. So failure to determine customers' total debts. You have not looked, you have not considered that this customer or other people are not the only creditor that they have. Maybe you are adding up more. You they have already dug a hole, and you are the one now. You are making that hole even deeper by extending credit to them. So this can be taken care of by carrying what we call assessment or credit risk assessment, which we talked about in our module number 2. Failure to decline a loan or credit when necessary. So for us, there are people who believe the credit facility must be given. Let me mention here that credit is not a right, it is a privilege, and not everyone not everyone qualifies for it. We must have criteria or a criterion on how we approve or appraise customers for the credit facility. So loans which do not serve the purpose for which they were given, it is good to find out. Ask the customer, why do you want this credit facility? What is it for? It is your right. It is your obligation as a lender to inquire and know why the customer wants a credit facility. Then we also talk about other things that lead to default is decision based upon favorism. That is between the loan officer and the client. Maybe they have a relationship. Maybe there is even a kickback that the loan officer is getting. So this also leads to default. You will come to realize some account, the customer was good at paying. They paid up to a certain level. But the last maybe 2 or 3 installments, they halt making payment. And sometimes when you follow up, they say, for that part, I'm not the one who is supposed to pay. Your credit officer XYZ is the one who is supposed to resolve and sort out that account. So that also brings a lot of problem. Then on the side of the customer, why customers fail to pay? Why do they fail to pay? Is one, there was poor appraisal, deliberate non-payment. Some of them, they're purposeful. They are bad payers. They are known. They are defaulters. They just fail to pay. It is their nature. So they deliberately fail to pay. This could be as a result of fraudulent transaction by the borrower. Yes, they came to defraud your organization. Then poor credit and debt collection practices. Also, the side of the customer, they could also also be having a challenge in terms of collecting their debts as well. So they tell you, I'm anticipating a payment from XY. Once they pay, I will be able to now pay the debt. So poor credit and debt collection practices by the customer. Personal financial embarrassment, maybe they have gotten into insolvency, into loss of job, bankruptcy, or business failure. So they also now tend to default or fail to pay. Some of them are serial defaulters. They have a name that they don't pay debts. So when you lend to such kind of a client, you lend to them and they will never pay the debt. The other one is taking advantage of legal process or loopholes. Some of them are bright. They know that there is nowhere you can take them if they fail to honor or when they fail to pay. So sometimes they also take advantage of those loopholes. Then others is the act of God, or what we call natural calamities that may happen, adversely affecting the business. So that some of them may be not in the making of the customer, but it could be because of the situation or conditions that have maybe come up in the market, made them not to pay their debt on time. Then at that point, I want us to talk about revenue collection challenges. What challenges do we encounter when we are collecting? What challenges do we encounter when we are collecting? I think one of the key challenges, it is slow billing. Failure to issue invoices on time. So if you don't pay, if you don't issue statements, if you don't bill your customers on time, definitely you will have a problem in getting paid. Then the other one is poor record management. Sometimes the customer says, can I have a copy of the invoice? You track, you trace, you cannot even get that invoice. So that leads also to non-payment. The other one is slow processing of receipts. You don't process receipts on time. You do not even carry out reconciliation with your bank statements. You do not even follow up for your debts. Failure to follow up. There is actually no one designated in the company to follow up. There is no maybe a credit department in the organization. Lack of a chase history. You don't keep record of who has paid, when they paid, or when you have a conversation with the client, you fail to keep a record on when you anticipate or expect the next payment. Poorly trained officers, you have not employed or you have not trained people who are supposed to be doing collection. So that also brings a big challenge. The other one is dishonest customers. Sometimes you find that even in your follow-up in your collection, some customers are defaulting. They are dishonest. They actually took a loan or they took a credit facility with no intention to make payment. Then the other one is negative attitudes. This could be negative attitudes of the customers or negative attitudes of the staff. So let us make sure that even as we are onboarding our customers, we know that they have good character. Like we said, we talked about the 5 C's or the 7 C's of credit. Make sure that the customer has a good character, and our staff also have a positive attitude as far as collection is concerned. And remember, we've just said that collecting is our right. Getting paid is our right, because we have already performed the part of the contract that we had with the client. So we should make sure we are paid. So what is the way forward to challenges? I think how can we now deter, or how can we prevent our organization from getting into so many bad debts? I think number one, we should ensure that customers fill credit application forms. They are filling forms, they are applying, they have given us their details, they have read our terms and conditions, we have stated our payment. The credit application form usually say it is the primary document of gathering customer information. The other one is evaluate creditworthiness of customers. Do not lend blindly. Ensure that you have carried out assessment to establish whether the customer has the ability and the willingness to pay you when the debt falls due. Make sure that you're also not lending without a limit. Set credit limits. Do not leave doors open. People will come in and take everything and leave you without anything for your business. So set limits, the much you can allow the customer to take or to get from you as far as credit is concerned. Determine invoicing procedures. Have a laid down procedure. Let everyone know, everyone who is in charge of that section, let them know how they're supposed to handle invoicing and how they're even supposed to make sure that invoices get to the customers on time. Develop a system to manage receivables. You have a workable system that can enable you to raise invoices, process reports, track customers as far as payment is concerned. Set up a way of collection. Have a way collection procedure. Have a collection strategy in place. And what are we saying? Keep track of new accounts to make sure that new business or new customers do not also get into what you are calling default. What else? Assign a credit staff to key accounts to maintain relationship. This is where we talked about the 80-20 rule. Let us make sure that our big clients or our big customers, we have a way of managing them to maintain relationship, because when we have good relationship with our customers, they are going to pay us on time. And then the other one, if customers have not paid you and they are delaying and they are not showing any commitment to paying, stop supplies until you receive the payments. But remember, stop the supplies in line with your credit policy or the policies in the organization. Give new customers less credit limit and increase as you learn them. So do not just be generous to a new client. Allow them to grow with you. Check their potential by giving them a little room for credit. And if they prove to be good also, you grow the limit as they are purchasing from you. Make use of phone calls to remind the customers. Do not shy off from asking. Those who ask, they receive. Make sure that you are reminding, you are contacting them, either through SMS, either through telephone calls, either through visits, all manner of strategies. Make sure that there is constant communication with your customer. Maintain consistency. That is also very key. Let them know next month you are going to call them, so that they also honor, they also know that by failure to pay you, you will get in touch with them. The other one is resolve discrepancies on time. Many customers, sometimes they fail to pay us because they have raised disputes, they have discrepancies, but no one is resolving them. This also delays in payment. So make sure that we have a way of resolving discrepancies on time or resolving disputes so that customers can pay us when they're supposed to pay. And then finally, we talk about what we call dangers or warning signs of default. How will I know, or how will I tell that the customer is about to default? Actually, long even before default has taken place, there are normally signs already. Signs of time are usually there. And this one I usually say, when you're selling goods and services, or when you're giving or extending credit to customers, make sure that you are observing, you are in touch with them, you are monitoring their accounts. And anything that happens, for example, like a bounce check, a customer just bounces a check, and the reasons given by the bank for the bounce check, maybe their funds, insufficient funds, for example, then that should ring a bell. If they were not used to that and they start bouncing checks, that is a good thing that you need to take care of. So even long before default has occurred, already the signs are there. So let me share with you some of those signs that you need to keep tracking, that you need to keep looking at when you are dealing with customers, so that you can arrest default in good time. And this one is a deteriorating record in payment patterns, how they have been paying. Maybe they used to pay you on time, but now they're not paying you on time. There is a lot of delay in paying you. That is a sign that they could be having financial challenges. Frequent change of employees. This one is common. You are in touch with John, then after a month, John leaves. You get now another new one, Abigail. You follow up with Abigail, then another one you get within a very short period of time. And especially people who sit in accounting, if they're exiting the business so frequently, you need to know that there is a problem or a challenge as far as finances are concerned. Rumors. Sometimes we get rumors about a certain business, but we don't take action. Some rumors, and we usually say some rumors, they could be just a bigger percentage, could be true. So listen, put your eyes on the ground. Make sure that you are listening to what the market is saying as far as your customer is concerned. The other one I've mentioned is bouncing of checks. This one is another area. Bouncing of checks for lack of funds in the account, or they were stopped. The client stopped the check for their own reasons. The other one is court cases on default. Other creditors have sued them for non-payment. Soon it's gonna be you. So those are some of the signs that we need to keep track of. Increased queries and complaints. You have been selling to them the same goods. You have not changed quality. You have just been servicing them the same way. Then they start complaining. They start raising issues. They will not pay because the product didn't meet the standard, or there was this issue that was not, that there's just an increase from nowhere of complaints. You need to be worried and careful. That could be a sign that things are not right with the customer. The other one is in low stock level during peak season. Let me take a good example. Probably maybe it's Christmas, and maybe your client, maybe this is a customer who took a loan, and now it's Christmas period, and you're finding their shop, they sell clothes, and we know December or Christmas period is when people buy a lot of clothes. Then you realize the clothes are not there. So this tells you they have low stock. Probably it is because they are not able to pay the suppliers in good time, and therefore their stock level has been affected for non-payment. Signatories are away for longer than 2 weeks. Who is running the business? How? If they are all the time you call, signatory is away, it's a month, 2 months, this could be a sign of failure. So you need to dig further and to know why the customer is not paying you. And then the other one is unnaturally larger orders. They just give an order from the blues, a big order. They've never given you such a big order. This could be a way of maybe ordering so that they bridge the gap. You will not be asking for payments. They will not be making payment for a long time. So they want to hide behind the large order so that they keep having whatever the stock as they are maybe looking for ways of resolving their financial issues. The other one, frequent change of bankers. They were banking with bank XYZ or ABCD Limited. Now they have moved to another bank. They moved to another one. Most of the time, most people look for other banks when they want maybe to get a new loan. They want a facility. So they could be going to new bankers when they are experiencing financial challenges. Change of premises to a less attractive area. Probably your business was in somewhere in town, very strategic. Now you are moving from town, you are going to somewhere dingy, somewhere so small. That should send a message to you that things could not be right with the customer. Negative press comments about the customer, where there are a lot of complaints, maybe issues to do with the environment, a number of complaints coming up on this customer. That could be an issue. Resignation of key personnel, that also could be an indication. These are people who are in the kitchen and they know what is cooking. So please do not dismiss that information. And then increased excuses. All the time they have an excuse. Allow us not to pay. I don't know, we pay less than this. We are going to pay maybe, funny excuses from nowhere. And then, of course, the other you hear the taxman had raided the business, or what you call tax raids. When you see the taxman going into that business, if the taxman is not being paid, soon it's gonna be you as well. Because you can imagine when a taxman is not being paid, others also will now start falling into the same category with the taxman. And I want to believe having those techniques, having those, knowing the tools to use in terms of collection, knowing the reasons or why customers don't pay you on time, this will enable you or will help you to improve on your business. I hope you have enjoyed the lesson, and in case you will have any other challenge, you could maybe reach out with the contacts provided. Feel free to ask, feel free to engage, and I also welcome you to study with us in the next module. We will have another module, and there's another module and another one until you become better in matters and areas of credit management. I hope you've enjoyed, and as I mentioned, Company Credit and Debt Management Services is a company that offers credit solutions in relation to collection, in relation to training. We also offer a number of services in terms of consultancy, and we are based in Kenya, and we can always come over to you wherever you are, whatever part of the world you are. We are global, and we can meet and serve you. Thank you so much. I hope you have enjoyed the lesson. Thank you, and looking forward to see you subscribing for the other sessions. Thank you.